So just to show you guys some proof of concept before we dive more into the video, today, Kevin in our private group in the ETU team, he took some afternoon trades and also some morning trades with us, and he only had 1 loss and 2 winners in the afternoon. He made 3.7 later on in the session, and he total, this is the main thing, he total made net 11.7 risk reward today. And a lot of people are saying 100 risk reward, Jay, in a month is impossible. If you can average even half of this, that is 100 risk reward in a single month, right? Half of this. You don't need 11.7 risk reward every single day or 10 risk reward every single day. That would be 200 risk reward a month. Even half of this is enough to generate you 100 risk reward a month. This just shows, my system and the proven results that students are getting with my system and just learning and mastering it, right? And he said, this is a good day for me, since this is not typical risk reward for him yet, but he will get there, right? Once you guys master the system, gain some experience, do some journaling, and a little bit of discipline, you will get to that point, right? It's just a matter of time, essentially, at that point. So that is Kevin, right? And this is also in the free Discord. If you guys just join up in the free Discord, this is another student of mine. This is actually private mentorship student, Tyler, right? So Tyler, he ended up today 7 risk reward, which is still very good, by the way. 7 times 20, it's 140 risk reward a month, right? And he's saying he's trying to reach scale to 1 million by 2026. So that's great to hear. That's about like 6 months, in 6 more months. So he's been scaling very well. He also had an undefeated month last month, which he told us. So that is great, right? Literally just people that are begging to make even 11.7 risk reward in a single month. Right, there's systems out there that only make 11.7 risk reward in a month, and over here at ETU, we're able to do that within a one day or maybe a week, depending on your skill level, right? And it doesn't take too much skill or experience to trade my system. For the most part, it is very mechanical, and if you add that little tiny discretion, you can also significantly boost that win rate as well. And then here is just proof real quick of just Kevin. He basically passed another topside combine, and he is now 3 express funded accounts on TopStep, right? So far he has 3 total accounts on TopStep. He got funded and he's working towards those payouts. So that's exactly what I'm waiting for, right? Waiting for these payouts. I know Tyler's gotten a few already, but people are obviously still joining the group. So some people are just brand new or slightly new. So, it will take some time, but once you master it, man, the sky is the limit. In today's trade recap, we will be discussing about data wicks and the size of them and which sizes are the ones we are really looking for and why. So we had a data wick play today at 8:30, right? You guys can see we have Red Phone News and this is CPI. So this is literally perfect A+ in terms of data wicks, because CPI will typically, along with the other news releases I may specified, will typically give us a good solid size data wick to trade off of. Now, first off, before we get into specifics in today's video, I just want to ask you guys, liking the new background. I installed basically some new lights to see if it makes things look a bit more professional and whatnot. So let me know. But aside from that, basically for data wicks, typically we want to see a big candle for a data wicks. So typically my general rule of thumb is the bigger the better in terms of size of the data wicks. So something like this is an A+ data wick. Something that is quite small. So we have a very small data wick or data candle. It's going to be a little bit lower probability. I'm still going to consider, like I said, an A+ setup. It's just know that it's going to be a lower probability, and not just that, but also part of the reason why it will be lower probability is because we are entering on the 1 minute. So unless you're entering on the seconds, finding like an entry model on the seconds, again, remember, time frames are fractals. So whatever time frame you're on, you can just use my same entry model on that time frame. So if we do have, let's say if we do have a small data wick, right? And again, this is not something you can really anticipate fully on the size of the data wick. You just go immediately based off it is what it is, right? Let's say we have a very small relative data wick, and I don't have a specific mechanical size in terms of pips, percentages, things of that nature, because each day the volatility of each candle will be different. So I would say for the most part, just look at the size of the candle of the data wick and compare it to the size of the other candles that have revolved around that period of time. So maybe let's say within the first hour, or not the first hour, within an hour or so of that data wick, look at the size of the other candles. If the data wick basically looks like the same size of the other candles, then it's not a good data wick in my opinion, and it's a lower probability data wick, because that likely means the size of the candle is relatively small. And again, 2 reasons why you will have a play be a little bit lower probability is one reason, but the second main reason for why we want to kind of like be cautious really of small data wicks, again, I will still take these, but if they're too small in terms of if the data wick looks like a normal candle, I'm not gonna really take the data wick typical setups for the most part, right? Unless there's some other confluence aligned. I'm not just gonna take it off it by itself. But you know, if it's bigger than the other candles around it, sure. But obviously, again, like I said, the bigger the better, right? Something like this is amazing. And I'll explain to you guys real quick why. So let's say we have a small range here, and let's say this is a small data wick. The problem here is because we're entering on the 1 minute, each 1 minute candle is like this size, right? And if each 1 minute candle is this size, by the time we get our entry model on the seconds or on the 1 minute, you're likely to have already missed majority of the move of the profit, and you would be managing your trade way too high up. So let's say we sweep the low here and say you're entering along here. Well, at this point, we're already almost towards the target at your entry point, right? Which is not ideally what you want. You want to ideally have a good entry where you can still manage your trade to break even and whatnot if you want to, right? For me, typically, data wicks are A+ setups to me, so I don't really do break-even management for them. But for people that do break-even management, this is for sure something to take into consideration. It'll be harder to manage your trade. Not only that, but also people that want a higher risk reward, it's going to be very difficult to even catch a solid risk reward if you're trading a small data wick like this, because again, like I said, the 1 minute candles are already this size, right? It's going to be very difficult to trade to even the other side of the range of the data wick. Therefore, we want something bigger. Now, if you really do want to trade these small data wicks, again, typically you want to make sure there are at least red folder news, because orange folder will typically create these small data wicks, and I wouldn't consider them data wicks unless they fit my specific criteria, like I outlined to you guys about CPI, I believe PPI, and a few other ones I specifically talked about. Those are the specific ones you want to be looking for, and basically nothing else, right? So basically, if you really do want to catch these smaller data wicks, the only thing you can't do based on my recommendation is go in the seconds. So you ideally would have to just go in the seconds to catch these trades. So you just go, let's say, typically the 15 second and 5 second is what I use most for the seconds. You can also use 30 seconds. But again, depending on the entry model you want to use and the risk reward and such, you have to adapt based on the size of each candle. So switch to whichever time frame looks the most clear essentially, or whichever one you have done enough back testing and have enough confidence in your data to show that, okay, me using this lower time frame, using this low time frame will give me an edge still in the market. Because the thing is, with lower time frames like seconds, you're going to have a smaller edge for the most part in the market unless you have a very high quality trade with tons of context and confluences, because these are much smaller moves, right? An internal change of character, like I said, on seconds is literally just a 1 minute candle break on the 1 minute. That's literally all it is, right? So not a lot of confluence or confirmation. But again, you just go on the seconds, and on the seconds, these candles will probably be obviously not this fat, but they'll be much smaller. Something like this, right? Let's say this was the 15 seconds here. And then you look for an entry, whether it's an IFG or OB entry model, or impulse if you want to be brave and aggressive. Take that. And then basically you just target the opposing side or whichever other target you feel comfortable trading with. Just don't get too aggressive. Because remember, the other side of data wick is also liquidity that will get ran. And if we expect that to get ran and we get confirmation, price will go back on you, right? So again, it's just something to say for those that want to trade these small data wicks. Personally, I don't recommend for it. I recommend you guys just waiting for these bigger data wicks like this, because when we get these big ranges, we can get much more risk reward out of our trade because of the huge imbalance. Even if it doesn't create an imbalance, the huge range essentially to the other opposing side of the data wick, that gives us a ton of confluence, right, towards our trade. Or not confluence, a ton of space for us to manage our trade, right? Because you be essentially entering up here, what's data wick sweeps, and then whatever entry model you want to use there, and then you have this huge risk reward trade here. Now on this day, we didn't have an entry model here, so I cannot take this, but this is 830, right? The high of the data wick, and it swept perfectly to the T. We had an instant reaction, which is something that you can also use as confluence in your trades. So whenever you see we have an instant reaction with the entry model, it will give you a slightly higher win rate, for example, than a trade that stalls for a long time, goes up further and moves very slow and then pushes. That would be a bit lower probability. We want something that's, for the most part, instant, right? Instant reactions are reactions we are looking for when we're trading such models in the market. So something like this, right? there's no entry model here. So we couldn't take the short here today, but I did take the long here for the data wick low, right? Wait for the data wick low. We did mitigate this POI. So this POI adds confluence to this long here. Now, even if you did use this POI and you did not wait for a data wick low to sweep here, there's no entry model here at all on the 1 minute. Now, there might be something in the seconds, but again, for the most part, I don't really go off the seconds for these trades like this, especially when you have a big range, right? Big ranges, you don't want to be using seconds because there's a ton of fake outs. All these candles are much bigger, and so seconds literally stands no chance. There's not going to be much significance in the seconds, even if you get a lot of confirmation on the seconds, like 2 breaks to the upside. It's still not enough confirmation. So I would, like I said, big ranges, you want to avoid seconds at all costs. Just use the 1 minute for the most part. You will still have a very good edge once you understand my system and strategy on the 1 minute. There's no need to overcomplicate it and go on the seconds to me. Especially when we have this big with data wick, we have a big range. This is exactly what we're looking for. This is an A+ data wick candle, essentially, right? Gives us a lot of wiggle room to the upside and downside. Now, since the data wick high already got taken out, right? There's no need to really target any other wick because, well, it already got taken out, right? So for me, I just did a scalp here. Now, if you were trading higher time frame, you can anticipate this as short. This is a mitigation of a potential higher low to make a higher high, right? That is something you could definitely anticipate, but I just scalped this today because I kind of oversized on this trade because I was chasing it. I didn't have my calculations quick enough or correct enough. And so I kind of had double the risk on this trade. So it netted me about 1.7 risk reward, which times 2, which is about 3.4. So this did net me a good amount of risk reward. So I kind of exited earlier, but if I didn't have my oversize and I was just sizing normally, I would just go for this at least, right? At least here, because we have trendline liquidity above. So at least that POI right there. And you can see it would hit perfectly for a 3.3 risk reward. Now, put this back here. Now, we obviously missed the high, right? And it is what it is. This is its probabilities. In terms of reasons we missed a high, I could not find too many reasons. However, there's this one thing that did mark out. So you guys can see on the very far left, I tell you guys not to really look at the left too much, especially if it's like an old POI, right? Something from this long ago. This is from 96 days ago. So it's not going to have as much influence on the market in a sense. It's more likely to get taken out, but we did take it out right here. As you can see, we swept it. We swept this high here. And because we swept this high, right, that caused this reaction here. So you can use that to try to anticipate us not potentially going higher because we did have a sweep on the very far left. And so we can anticipate a down move, which we did here, but that doesn't mean the down move just ends here, right? It could end here and go higher, or this down move could create a mitigation cycle, which it did here, to just mitigate and not create or break any structure and just go lower like this, right? So these are just probabilities playing out, man. I know some of you guys may have been targeting the high there, but this is probabilities and there's not much else to it. So I'd say if we didn't sweep that high yet, you can probably there would probably be a higher chance of price taking out that high up there, or at least having a mitigation cycle than going higher. That's what I was basically anticipating later in the day. So again, I did not take shorts here. Shorts played out nicely here. And this pump or dump here actually was like off financial juice. But the point still stands that this was basically a valid trade. It would just be kind of counter trend, or basically just, yeah, it is counter trend to my strategy. But in terms of risk reward, if you think it's worth it, which this clearly is worth it. So if you just outline your risk reward tool ahead of time and you see it's a really good risk reward, you can just risk it and say, okay, I'm willing to take this risk because this is an 8.5 risk reward off this OB entry model guys here, right? And this is not even targeting anything crazy. This is keeping a conservative target at this PY right here. Almost 9 risk reward. You get it instantly. Now, can you anticipate this big of a move? Potentially. Why? Because of new information given to us in the market, right? We take old information as context and confluences, but we also will take in at times new information like this on how price is delivering, because that's new information. This is a 48-minute consolidation here. And this is something I wanted to bring up in other videos, but I don't have enough backtesting data to back this up yet statistically. But this is something you guys can journal if you want and let me know what your results are. But basically, I've been looking and keeping track kind of trades on seeing how often we get a break of structure in terms of liquidity whenever we consolidate. So for example, the theory or basis of this thesis is that whenever you consolidate, you can expect the other side of the range to get swept or taken out instead of holding. So again, we had major consolidation here, accumulation, whatever you want to call it. Therefore, you can anticipate this low to get taken out. And that's exactly what happened here, but we do have to backtest this at least on a lot more sample size, right? One trade can just be pure randomness, or it will be pure randomness. Now, if you're talking about entry models, we did have, I believe, an entry here. So we did have an OB entry model here that you probably would have got stopped out, right? And after you get the second one, you can just consider this basically an internal liquidity sweep if you're still looking for shorts, right? And then no confirmation after that, you still wait, and you take this short here. So that would have been your trade right there for a risk reward shorting. And if you're incorporating the consolidation theory, which is what I'm going to call it basically, what that means is, again, like I said, when we consolidate in the opposing side of the range, we can expect the other side of the range to likely more often than not get taken out as liquidity instead of holding. So you can avoid, for example, maybe a loss here or maybe like a loss down here. I personally would probably not take a long here just because at this point, if you're going to wait for an OB entry model, at least we already kind of mitigated the origin of the previous leg structure. And so you would ideally want to wait for more confirmation before taking a risky trade like that. In terms of maybe like another entry model. So you have your OB entry model and then maybe you wait for another entry model on the women to confirm and then you take the trade, which did not occur here. So there will be no confirmation here if you want to use double confirmation anyway to take that trade. So yeah, that's basically the consolidation theory or accumulation theory, whatever you want to call it, that I'm still currently collecting data on. You guys feel free to as well, but that's something to just, be aware and take note of whenever you're trading right now. Like for example, we didn't have consolidation here, thus less likely to take out the high. That's just an example, right? Probably find more examples here. We didn't really consolidate too much here. This isn't really consolidation here, right? Consolidation is when we have like a pure box like this, right? Where price is not really moving around. We're still breaking the structure and having better ranges here. So I wouldn't really consider that consolidation. You could argue this is not consolidation either here, right? But we did take out the low. So it's not always going to happen. It's just the theory or thesis is it's a higher probability. Now, the only other trade I took today was, well, it was just this trade, right? This trade I marked on my chart because I said I'm not interested in longs, but if you want to take a long, this is a potential long. And whatever your targets is whatever your targets are. This would be your very aggressive target or aggressive TP. Actually, no, at this point, this would be your aggressive TP. This, anything past this high would be considered very aggressive, like towards this PY, because we have a new range, aka you guys know, new value, right? This is a new structural point in the market. So hopefully that makes sense, right? So some people that took the longs as a loss here, that's okay. I would say that is still within valid, in terms of valid loss, that is a valid loss within the system. That's something you just have to accept. You won't always be perfect because in this case, you can expect this should be a mitigation cycle to go higher. Now here for this trade here, this was the entry model off the IFG, and the TPs, you could have just kept it here for 3.6, which is, by the way, really good risk reward anyway. And then your stop loss, depending on where you want to put your stop loss. We never came back to the original OB, but we did come back later to this OB right here. So if you want to take that OB entry model there, it hits you to the wick right there. It gives some wiggle room for stop loss, and that would have been a perfect 4.3 risk to reward trade here, folks. After sweeping out, what do we sweep out, guys? New York kill zone session low, right? But I did write as a comment that I'm not a fan of this since we did fail the mitigation cycle. So this is a clue in the market that's telling me new information. This is a clue in the market telling me, okay, we might not be actually be going higher now at this point. We might actually go lower before we see higher prices because the higher time frame is bullish, but we can expect a lower time frame reversal back down and then go higher later on. So again, we won't be able to time the market perfectly, but we will take context clues. And this is a context clue that I was looking at. We failed the mitigation to hold this PY, which should theoretically hold for the most part. Can we sweep this low and still take out all these highs? Yes. But what's the probability? It's going to be lower. So hence why I didn't take this long, but you could have taken it after we swept for scalps or even just a normal setup up to this PY here, or even this PY right above if it looks unmitigated. And then we later tapped into, I think it was just this PY here that's unmitigated. I can't really tell. This is not quite clear. If you go on NQ, you probably see something better and more clear. But for the most part, I was on ES today. So this is, again, the trades today. If you took a short if you were basically trading both longs and shorts today, you would have banked. You would absolutely bank, because there are entries you can take internal continuations here. I personally don't like to trade those often, but there is a good one right here, or good ones right here. And then if I know some of you guys in the Discord, you actually guys caught this move here, which is very nice. You guys took a stop under setup right here, fractally, and you took this to the low, which is awesome and perfect, right? That's a really good setup. So that's basically going to just go over today. There's not much else in terms of price action I can really cover today, because my daily bias was also bullish, right? So there's not much else to me today. But like I said, if you were both long and shorting today, you would have banked absolutely. There is probably, let's see based on the entry models I teach you guys. There's 3 risk reward there. There's 8 there. You take 1 loss here. You miss this setup. We don't count that. So 3 minus 1, 2 plus 8. So that's 10. And if you took another continuation short down here, at least here, that is probably like 6 or 5. So we say 5 to give the benefit of doubt. It's 15 risk reward. You probably, if you just avoid this loss, or let's say you take this loss, it's minus 1, it's 14. This is another 4.3. That's 18 risk reward. And then if you take 1 loss here, and then you take this massive winning trade here, that is probably like 23 risk reward. Guys, this is literally 23 risk reward, and this is within what, about 5 hours. So yes, it may sound like a lot of time, but understanding 23 risk reward is equivalent to risking 1% per trade and making 23% returns on your entire account in literally a single day, a single trading session, not even multiple trading sessions. This is within a single day, 5 hours of your time, and you will clock out before someone clocks out of their 9 to 5 job, right? And make way more, substantially more. And of course, there's other setups I do see right now, literally later on in the session, but we do get some a little bit more choppy price action later on. So again, basically that's going to be sum up today's video. Hope you guys did enjoy this trade recap and learn a lot. And I shall see you guys at least in a free Discord if you're not in there yet. If you do want to be a member of the ETU team, look at my trade ideas I send in the group daily, as well as get access to also the 100 risk reward course to learn my entire strategy system. Check out the link down below on my website, and as well as on the WAP. You can get access to the course and also the private one-on-one mentorship. Only 1 spot left for that currently, and once that spot's gone, it's gone.